People oftentimes get their claims underpaid. Actually, it's about 99% of the time that your claims are underpaid. So we're going to talk about your insurance company that didn't pay you enough for the claim and what you can do to try and get more money. Now, if you notice my hat says dogs because people suck, they need to make a hat dogs because insurance companies suck. So my name is Mike Keeler. I'm a licensed public adjuster here in the state of Florida. I am your favorite and only YouTube public adjuster. So the business practice of underpaying claims is a common practice for insurance companies. Because whenever you're paying money, and it happens to be some type of settlement, it could be auto insurance claim, a health insurance claim, a life insurance claim, you start low. So you're going to pay a claim a portion of what the value of that claim is. That's just smart business. But yet, when they say there's no more money there, people just don't do anything. So every single claim with the insurance company and homeowners is intentionally and deliberately underpaid. Just like with auto claims, when it comes to if you're hurt and there's an offer, the first offer they're going to make you is going to be intentionally and deliberately low, not what the true value is. Okay? The reason being they want you to walk away. They're going to tell you no. There's no more money. Leave us alone. And the big thing is the reason why they've continued to do that and why they will continue to do it is because it works. 90+% of people, this should be about 97% of people walk away, so the strategy works. So when we're talking about the role of the field adjuster, there's two different roles we got to talk about, the field adjuster and the desk adjuster. So the field adjusters, they work for the insurance companies. Don't let them fool you. You're going to see their business card and maybe it says independent adjuster. Okay? It may say Rockford Claims Consultant, independent adjuster, Mike Keeler. There's no independent. Okay? They work for the insurance company. If they don't write a lowball estimate or an estimate that's low, the insurance company will never hire them again. It's a game, people. Understand that. So basically, to make a living, adjusters are willing to lie and screw homeowners. That's exactly what it is. Field adjusters, desk adjusters, basically are willing to lie, willing to misrepresent the full value of a claim to protect the insurance company. There's a lot of lack of morals and ethics and values when it comes from adjusters. Let's talk about these desk adjuster people. So these are people, they don't go outside anymore. I don't want to go into history, but before, the person who was the field adjuster also was the desk adjuster. Insurance companies had a plethora of field adjusters, but they cut back and they realized it's cheaper just to do the independent than it is to pay for all the benefits and salaries and what have you for field adjusters. So insurance companies have a high turnover rate. People get burnt out from all the claims and all the bullshit. It really does. And I think some of them just realize I just can't keep on continuing to screw people. They get burnt out, told what to do by their managers. Others that stay a little bit longer tend to be brainwashed into the cult of the insurance company. That denying claims is a good thing. That screwing people's a good thing. That's what we're supposed to do. They don't put on words like that, but they know, they laugh at each other. Listen, I work for the insurance company. I know what goes on. Yes, it was a long time ago. Yes, these were times where there were a big difference. However, the thinking doesn't change from people that work for the insurance company. So a lot of these desk adjusters have limited authority, 10 to 15,000 mostly. Now might get some more experience. I've been there longer than 10 years. They tend to end up going into different roles and not really handle claims, like maybe into litigation, legal, doing mediation, so on and so forth. So, but they all will have a limited amount of authority. So what can you do? Okay, you're up against a multi-billion-dollar enterprise, whatever insurance company it is. So a lot of what you can do is to depend on what state do you live in. It's going to depend on the insurance company and depend on the claim. So let's briefly take a look at some of the states. So for instance, in Florida, they offer a free mediation program. I've settled some in mediation and some have been a complete waste of time. So some states force insurance companies to pay for attorney fees. I know Texas does. It used to be Florida. Florida just changed these laws in 2023. Thanks to DeSantis and all the other politicians, Republicans in the state that took money from insurance companies. DeSantis took $10 million for his presidential campaign. That guy can bite on the head of a snake for all I care. So all states, all of them, have some type of laws in place for how insurance companies have to handle claims. Florida used to be the longest period that the insurance companies have to make a determination on the claim from when you file a claim. That used to be 90 days, now it's 60 days. There's a lot of states that have 30 days, meaning you file a claim, they have to let you know either that they're going to pay it or deny it within 30 days. Now, again, insurance companies don't care about laws. Nothing happens on them. Politicians will never enforce those laws. Judges don't enforce these laws. They're big conglomerates that donate money to judges. They donate money to politicians. So nothing happens to them. But if they don't make a decision on your claim by either paying it or denying it, then you have the ability to go ahead and move into a lawsuit. Don't forget, please like this video, give me a thumbs up, and subscribe to the channel. So let's look at these insurance companies. So in Florida, which is a totally different animal than the 49 other states, the only one that's probably somewhat close would be like Louisiana, Texas, Alabama has some bad laws. So in Florida, insurance companies treat people and homeowners entirely different than what they do in other states. They treat people as if they're criminals because of the way, because of all the claims that happen in Florida. Listen, it's nobody's fault to have a claim. But you have a highly dense population with bad, turbulent weather. Of course, there's going to be more claims. So other states happen to have more diversified insurance companies, and they're more claim friendly for the most part. Those are changing a little bit when it comes to roof claims. Okay. So the other thing is with these insurance companies is their policies. Now that's going to vary from state to state. Most of the wording is the same because you have an HO3 and that HO3 goes across, but they can change things up, and they do. Citizens changes up their policy. Every single Citizens policy has a limited water damage of $10,000. In Florida, a lot of companies will then do what they call a special provision Florida, a subsection within a policy that limits the coverage even more. People in Florida are getting so ripped off because of the coverages and the lack of coverages, the exclusions, the limitations on roofs, on floors, everything. It's bad. It's really bad. So when we look at what you can do, as I mentioned in the beginning, it's going to depend on the type of your claim, right? It's going to depend on what state you live in, what else, who the insurance company is, and what type of claim you have. As I mentioned the last slide, roof claims are being denied nationwide. So this is a systemic issue when it comes to roof claims. Okay, water damage claims, and I'm picking this. Just these are the two most common type of home insurance claim. Anything involving the roof, and then anything involving water damage. So the water damage is your best chance to try and get the full value of your claim. Roof claims, I see very little hope. Now maybe you'll have that 1 out of 10 where they pay, but it's not looking good. Other kind of claims involving personal property tend to get messy. I won't get into the reasons why on that, but they usually depreciate at 50%, and even if you have replacement costs, there's still depreciation taken, so on and so forth. But this is what the landscape looks like. This is what we're dealing with. So here are the action items that you can take and what you can try and do to get the full value of your claim, to get the money you need to repair your home. Go back to the insurance company with an estimate from a contractor. Okay? Supply that to them. Ask the insurance company to send out another adjuster to meet with your contractor. I'd want your contractor there if he can be there, right? It's very difficult to get your contractor to be there, but if you have a good relationship with this person, maybe they will come. Now, all these 2 points, it's going to be if you don't have that big of a claim, 15, 20,000 or less. You know, anything over 20,000, I think you need to seriously think about getting a public adjuster or an attorney. Attorney, I always say last resort because of the amount they charge and some of the things they do sometimes I'm not a big fan of, even though we also have to partner with attorneys, right? You have to be very careful. Just like you have to be careful with public adjusters too. So, does your state offer a free mediation like Florida does? If so, that could be an avenue that gives you another possible alternative dispute resolution, we call these, right? Mediation, and then there's a couple others. So let's go back real quick. Supply your insurance company with an estimate. So if the insurance company does an estimate for 12,000, you have a contract for 18, give the insurance company that estimate for 18,000. Okay. You want to put it, the verbiage would be something like this. Dear Mr. Adjuster, please accept my contractor's estimate in the amount of $18,000. This represents the true value of the damages of my claim. I would expect Orbit Insurance Company to honor this contractor's estimate. If not, please feel free to come back out and re-inspect the property with my contractor. Okay? Keep it simple. So let's look at the second part of these action items. So I'm going to start from, let's do the appraisal last. So the other thing is you can hire a public adjuster, right? So let's use that 12,000. You got paid 12,000. You want to make sure that there's some meat on the bone for people that you hire, whether it be the attorney, who I always say is the last resort, or a public adjuster. Because if I use what I talked about, that your claim is 18,000, that's 6,000 delta, right? There's not much. I don't know if many public adjusters would be interested in taking that. Um, Normally I do, because I always believe that if you do something good for people, they'll refer people to you, and that's been the mainstay of my business. But a lot of other guys won't, because they want more meat on the bone. They would want, if you got paid 12,000, they'd want to see that your claim is worth 28. Now, a good public adjuster may be able to find other areas that are damaged that you may not know about. So sometimes that takes place. The attorney uses last resort just because of the cost. I mean, you're going to be paying 40%, 33%. If you're in a state where the insurance company doesn't have to pay the fees, but rather the attorney fees come from your settlement, most of them charge you 40%. You possibly could talk to them into taking the 33%. Obviously, if it's a larger claim, there's more incentive for the attorney to reduce it to the 33 and a third. Okay? But if it's, I'll say, between 20 and 80,000, they're probably going to try and take the 40%. So use them as a last resort. Okay, let's talk about this appraisal. In a lot of policies, not every policy, in a lot of policies, especially the bigger companies, State Farm, Allstate, Farmers, State Farm, Allstate, Farmers, Progressive, Nationwide. A lot of these will have the appraisal clause. I'm going to show you what the appraisal clause is and where to find it in your policy. Here's what it is. You would hire an appraiser. That can be, and I would suggest using a public adjuster. The insurance company hires an appraiser. If those two can't work it out, the numbers, it then goes to an umpire. Your cost in this is the following: the appraiser that represents you, and then the umpire. Those umpire fees are split. Doesn't seem fair, right? Split between you and the insurance company. So you've got a multi-billion-dollar company that's splitting the umpire fee. Doesn't make sense to me. Especially when they force you in this position because they underpaid your claim. Let's look at where you can find this. So in the conditions part, look in your conditions part. Okay? Normally this is where you're going to find the appraisal clause of your policy. And sometimes the appraisal clause is a little bit different as far as the language, and I'll tell you what that language is. If you and we fail to agree on the amount of loss, either may demand an appraisal of the loss. Okay? Meaning the insurance company can say, all right, we're going to put you into appraisal, put this into appraisal, or you can say, let me give you the exact wording on how you would do it to demand or request an appraisal. Dear Mr. Adjuster, thank you for the initial payment of $12,000 on my water damage claim. However, I believe that there is a substantial difference in the amount of what it's going to take to rebuild my home, comma, therefore, comma, I am demanding an appraisal on this claim, and I would ask that you have your appraiser contact me within the 20 days allowed or allotted by the policy. Okay, because look, in this event, each party will choose a competent appraiser within 20 days after receiving a written request from the other. The two appraisers will choose an umpire. If they cannot agree an umpire within 15 days, you or me will request that the choice be made by a judge. All right. Now, there's other language. So this normally you see in all the bigger policies, Allstate, Progressive, State Farm. Some companies where they don't really want to do the appraisal because the appraisal will more often than not work for the homeowner's favor, they put, see this little line right here? Either, let me put this in green. either may demand an appraisal of the loss. Okay, keep that language. But then what these insurance companies do when they don't want to do appraisal, either may demand an appraisal of the loss, but both parties have to agree. So they never agree. That's why they put that in there. Because the appraisal process goes a lot faster than a lawsuit. And so they don't want to see you get your money in a short time frame. They'd rather you sue them and it takes longer. So this is what the appraisal is. So let's wrap this up. Insurance companies will pay much lower than what your claim is worth 99.9% of the time. I have yet to find anybody who, sure, there's people that get their claim settled. Sure, there's people that don't move forward. Sure, there's people that they're okay with the amount. What I'm talking about, I've never seen anybody who's been paid fully. There has been some fires where they paid out. So excluding a fire where your house is destroyed, okay? I've seen, and I've handled many claims where there's been a payout. Excluding that, they do not pay 100% of what the claim value is. So there are several things you can do. Let's review this again. Ask for a reinspection. Submit your contractor's estimate to the insurance company. If your loss is under $20,000, over $20,000, I suggest that you may want to get somebody to hire to help you. Mediation, if your state offers it. The appraisal process. Hire a public adjuster, and last, the attorney. Okay, always use the attorney for the last resort because of the cost. Really hope you enjoyed this video. Again, my name is Mike Keeler. I'm a public adjuster in Florida, licensed public adjuster in Florida. If you have a question, need help with claim, here's my information. Thank you.